making the base. Today our topic is to make our base, how the next 20 or 20 plus session will be run. We are drawing the structure, and now our all the next sessions or the recording will be on around this structure. We have to each topic, each area we have to dive and see. But before important, what is the text, how it will work. Under this 3 or 4 main dimension, text will be there. But under each dimension, there will further details. The business vehicle or type vehicle which will pay the tax, this is also important. We have to understand the businesses. Unincorporated business. Is this a juridical person? The first question, whenever we will come in our mind, this company is a juridical person or the natural person? What is the legal status of that? So if we understand this, unincorporated, normally we are calling as a UIP. Is it not a juridical person? Not have a separate legal personality? Again, some difference will become. So be with me. Salaries and wages of the owner, 100% is allowed. Is not juridical person, but still the salaries of the owner and the is 100% disallowed. As a cost, we cannot deduct because it's a natural person business. Whatever the profit is coming is subject to the tax. So here word is used as a, normally we disallowed, non-deductible. And for better common understanding, if we say halal and haram, this not allowed is used as a haram also. Is not allowed to deduct. Now let's see the further, what is the breakup of the unincorporated partnership. One leg or one type is a sole establishment, other is the unincorporated partnership. Here the unincorporated businesses, this is the unincorporated partnership, this is the SE sole establishment. If we understand the structure of the business, then the further implication or application of the taxation will be helpful. Sole establishment business is a transparent. Business do not pay tax. Either sole establishment and sole unincorporated partnership. Both are transparent. Transparent means look through a fact. Means the thing that you seen there is a business, but actually the impact is the legally for taxation point of view, this business have no legal standing. So who is liable? Owner is directly liable. That's called the sole establishment. Business is equal to transparent. Business do not pay the tax. Who pay the tax? Owner pay the tax. Partner or sole proprietor pay city on the share of income. If the unincorporated partnership, he will pay on share. And the sole establishment is all belongs to him. Owner will pay if the running business is a sole trader or partner. So here another point, the UE do not have the income tax. Even they don't have the income tax, the corporate tax, these sole establishment who are doing the business activity, they will pay the tax on their business income, on their business income. Now, what is the definition of business income? They're doing the activity via the trade license or require the trade license. How you will differentiate is already have the trade license in the form of sole establishment, or is don't have the trade license, but he required the trade license. Located in some activities message. In some activities, is not required to have the trade lessons, but most of the activities required to have the trade lessons. Now, this is the very gray area or critical area, how we'll understand this activity is required the trade lessons or no. If we start discussing on this, many questions, many if and buts will be there. So what I'm suggesting, okay, go to the DD, any DD center and ask them this is the activity, whether it's require the trade lessons or it have any activity in your system. So this is the authentic source to verify, because we might doing certain activity and commonly we're not familiar is the trade lessons required or no. So this is the one of the my suggestion. Check with the DD centers; they will give you the appropriate advice on that. But mostly, as expat, we are having the trade lessons. Only the locals, UE nationals, they might doing some activity without trade lessons because as they have some advantage over there. Now the next is the okay. The common question is coming. Okay, if one person, one natural person, if he have 100 sole establishment, not LLC, not single. Okay. So what he will do he will register 100 tax registration? No, he will make only one city registration and one VAT registration. The similar case in the early timeline of the VAT in 2018, many people they did have such mistake. They are having the sole establishment 5 lessons, 10 lessons. They registered each one separately. But actually, this is the natural person, and natural person require only one city registration, one VAT registration. He may have 100 sole establishment or unincorporated partnership. Everything will come up here. But here, unincorporated partnership, he may have additional TRN because this unincorporated partnership would be registered for the city and that TRN will be used over here. That we'll see how it will be. It will not be subject to tax, but this registration will be adding over here. In city return, they are asked this specifically. But as a city return, it will be one. Incorporated business. Here, the important is unincorporated business. Incorporated business, where the lessons. See, lessons is commonly we knows, but as we earlier discussed, company is registered, our company is incorporated in UAE. Here we also seen the example private, some sole proprietor. So these businesses will pay the tax. Now we may use the TP somewhere, it will be the transfer pricing applied. Information note, local dividend, same we discussed previously. Again, why we are repeating, because we are re-emphasizing to understand what is the local dividend. Local dividend is a exempt income as company already paid tax on their profit and not deducted as expense. Here, this part is, if company is paid the tax, but this dividend is paid after tax, after tax, they're not deducted as expense. If the dividend is paid before tax, means the total profit minus the dividend amount what they paid, total profit minus dividend they paid, and now they are paying this is the taxable income. If they are calculating, I'm not saying this is taxable income, I'm saying if they did in this way, then it may not be exempt income, but this is not the correct way. Okay, So first company calculates the tax on the taxable income, and they will pay the dividend up on that income after the tax. So dividend is not a expense. What I'm trying to say, dividend is not a expense. Company already paid tax on their profit, not deducted as expense. Dividend already taxed from the paying party if in a UAE. If in a UAE, receiving party will not add into taxable income. Receiving party, that's why. Why? Because it's exempt. Other companies like UK, natural person running business as a sole trader, sole proprietor pay income tax. Just for understanding this example, in UK, if you have sole trader, sole proprietor, a natural person, not as a LLC, they are paying the income tax. But in UAE, we pay the corporate tax. The tax remain there, but we don't have income tax. We are paying the corporate tax. In UK, tax is a 45%, but companies pay. This is the income tax. Income tax is 45%, but companies pay 19%. Companies pay 19%. This is the, if we talk about the corporate, is lower than income tax. This personal tax is higher and corporate is lower. In UK, better to have LLC companies. This what we already covered. Now the unincorporated partnership, they have the option to apply for the transparency. They have the option to apply for the, if they applied for the transparency, business will pay city? No. Partner will pay city? Yes. Another TNN, but city calculated as per the one along with all sales sole establishment. This point we discussed. If trade license is there as the unincorporated partnership is not LLC company, then you can apply to the FTA, and if is approved, then business will not pay the tax, partner will pay the tax. Now, another factor, application transparency. How? Application to the FTA. As per the ministerial decision 261, but it's irrevocable. Once it's made and approved, then it will be considered UIP, unincorporated partnership, opaque. But as per the latest ministerial decision or cabinet decision, considered juridical person as per the latest cabinet decision. Earlier, they did not mention or clarify, but now they clarify is it once you submit the UIP application and it's approved, unincorporated is opaque, but it's now a late juridical person. And it's irrevocable. You cannot go back to the unincorporated partnership. I think one point I believe I'll try to explain again. Unincorporated partnership, here we are going to no tax for the transparency when we are saying at the company level. Here we are saying unincorporated partnership to words tax. I think this, I believe, is not clear. Unincorporated partnership, here you are applying to the FTA. Instead of the income in the hand of the partner subject to taxable, the income in the hand of the business treat as a taxable. Now, what is saying? Business will pay the tax. Business will pay the tax. Partner will not pay the tax. Shareholder will not, partner will not pay the tax. Here, what we are saying, business will not pay tax, partner will pay tax. The difference, hope you understand the difference. Here, we are submit the application. This unincorporated partnership is not subject to tax. Okay. But you submit, you said, okay, instead of 5 partner, how they will manage? Let's submit the application to FTA as a UIPO pack as per the regulation of 261. It will be juridical person, and now all the business income is subject to tax. This is the corporate tax return questionnaire. They ask this information. Is there taxable person is a in unincorporated partnership? This specifically asks. Why? If you say yes, he will ask the TRN of that. Then you have to put the share of that income in the return. If we say yes. Here, 3 or 4 questions, but here I'm sharing only one. If you see here, 1 out of 3. But this unincorporated partnership, when we come in this topic, we will dive in detail. See, if we mention no further implication, we will move forward. Return will be proceed further. But if we say yes, he will say TRN. This TRN, that of unincorporated partnership, then we put the TRN, then we'll put the relevant income also in the return. Okay, now quickly we can see the financial statement or the taxable income, how it will. Okay, city law is saying calculate taxable income as per applicable IFRS. Applicable IFRS, right? See, the law at one point of stage, he will mention this. But again, the law always talk about the exception. So this is the this is the reason. This is the reason and challenge also. Whole city law understanding or the keep learning. Even the FTA kept for tax agent also the CPD. CPD for every year you have to submit 20 hours for the city and 20 hours for the VAT if you are tax agent. If you are both, then 30 for the VAT and city. So this is the importance and the critical and challenge. Keep learning the taxation, keep familiar with the taxation. Here, as per the IFRS, what we do? We calculate the accounting profit. What is the IFRS rule of accounting? Rule of the game, rule of the accounting. IFRS define the rule of the accounting. There are many further details. IFRS maybe many professionals they are still continually following the IFRS, and new changes and new standards are coming. Old accounting standard is obsolete. Now the new IFRS is come in place. Here 1 to 20 total is a 41 accounting standard. How much is active? 24. How many IFRS? 1 to 17 or 18. How much exists? 16. Maybe now new IFRS came, it will be more. I think new IFRS 18 already they did the effective date also for the IFRS 18, if I'm not wrong. And this is the replacement of IS 1. Anybody will confirm the new IFRS? What is the effective date? Any participant would like to confirm what is the new IFRS date? 2027. Somebody else? Okay. Now here we are just looking overview. Earlier IS 17 lease, now is IFRS 16. IS 18 revenue, now IFRS 15. IS 14 segment reporting, IFRS 8. Now, do we need the audited financial statement for all the companies? Or which companies require the audited financial statement? Quoted company or listed company, stock exchange listed company. Normally we are familiar with the stock exchange. They follow the full IFRS. Unlisted or unquoted, they are not listed in any stock exchange. And majority we are in private sector, we are doing unquoted companies. IFRS small plus medium enterprises. So there is a full IFRS and IFRS for SME is also there. All companies not listed in stock exchange are SME as per IFRS. But in the current market, the banking, they have their own standard for the SME companies, small companies, medium companies, large companies. If employee is less than 50 is a small company. If employees is more than 50 is a large company, medium company. If employees is 100, this is the large company. This is some financial institution. They have their own benchmark for their internal credit rating purpose. But IFRS is, this is the definition. Any company that is not listed in stock exchange, this is the IFRS for SME company. What is the difference in both, why we are studying in this? We will come on that also. Unlisted companies. Unlisted company have choice to follow full IFRS or IFRS for SME. Oman and Qatar not allowed. There is no short version of IFRS, only the full IFRS. But UAE, they allowed, they given the option for IFRS me, because IFRS me is not much complicated as IFRS, full IFRS. Okay, UAE KSA allowed for IFRS SME. But now the point what I want to highlight or clarify over here, what is the accounting we do from here? After this, we compute as per accounting profit before tax. Now, taxable income. From this, when we calculated as per IFRS, now we are coming to the city. This is our starting point. Then we have the adjustment. Now, taxable income. Accounting started competition. We did everything as per accounting. From here, we went to taxable income. Taxable income in income minus expenses. Now the starting point is accounting profit before tax plus the adjustment plus minus. This is the taxable income. This point I was trying to clarify over here. IFRS 15. This is the point of the revenue that what we discussed in the beginning. So IFRS, just as an overview, ordinary business activities, main activity, one activity, principal activity, these are the income as a revenue. Other income as per FTA guideline. For threshold purpose, we have to add both. For city return, we discuss in today morning very detailed. Quick overview, the gross revenue more than revenue audited financial statement. If gross revenue is more than 50 million, full IFRS, first rule is full IFRS, the second is audited financial statement is required. This threshold will be a portion if the tax period is increased and decreased. No, it will remain same. Revenue less than 50 million is optional. Audited financial statement is optional when the revenue is less than 50 million. If the tax period will be more than or less than 12 months, it will change. No change. Remain constant. Same thing. Audited financial statement less than 50 million, yes. Optional, mandatory, no. For qualifying free zone is mandatory. Qualifying free zone is mandatory. Now, this is registration, city return, city period. For whom? City registration is required, city return is required. I think this point is something is missing. Okay, I'll come up with this. Okay, the revenue. This is the first threshold we seen in the first and morning also, and now second is revenue less than 3 million. First rule is a cash basis optional. You can, but optional means you have the option you can go. Small business relief, yes, you option you can opt. Non-resident person will not get the SPR. If non-resident person, he is not entitled for the SPR. Resident person only will get SPR, juridical person also and natural person also. City registration is required, city return is required, city paid, yes or no, up to what? Until the SBR, this relief is available up to this period only. Now, if you're, let's say year one, let's say to 2024, if less than 3 million is good. If 2025, if your exceeds 3 million, SBR is not available. In 2026, this is another important concept. Less than 3 million, can this person take the SBR or no? Can this person take the SBR or no? Anyone from the participant? Anyone from the participant? No one is saying no, no. More participant. Okay, yes, he is not entitled because the lossing from all previous year, he doesn't exceed from 3 million. Yes, this is the new legislation, the new amendment. Earlier, I'm not going to discuss in detail. Tax depreciation. The point is tax depreciation. Tax depreciation, earlier we are familiar, whatever the accounting depreciation is equal to tax depreciation. But now this is not the valid anymore. Now this is not valid anymore. So now for investment property like land and building held for appreciation asset recorded at fair value model accounting, but tax purpose 4% depreciation is applicable. This is just the small point, but itself, if you want to go through, this is the Ministerial Decision 173 on depreciation adjustment. But of course, during our training, we will discuss this part later on. And this is the new legislation. What is our task? The person or the professional belongs to the taxation. Every day, check the FTA website, Ministry of Finance website, policies, legislation, and ministerial decision, cabinet decision from city point of view. This is the ministerial latest that I already explained. Now, even the fair value MD allow a corporate tax for building classified as investment property. Anyhow, this calculation are there. Okay, now we're gonna end our session over here. Now we're gonna end our session here. Now we have the quiz that our understanding and here and Atif, would you please share the link again? I will give the code.